All right, welcome everyone. It is yours truly, David Morgan, and today, a first time, but certainly last not least, Francis Hunt. Francis Hunt is widely known as the market sniper, is a globally followed technical analyst and macro strategist recognized for his disciplined, probability-based approach to the markets. He specialized in identifying long-term structural trends using advanced charting, volatility analysis, and intermarket relationships rather than narratives or predictions. Hail that. Francis has built a strong reputation for anticipating major trends in equities, precious metals, energy, and cryptocurrencies by focusing on risk asymmetry and capital preservation. His work emphasizes when not to be in a trade as much to be in one. I'm sorry, I've got to digress, but one time or two, I have said sometimes the best investment you ever make is the one you don't make. Moving on, through marketsniper.com, his video commentaries, Francis is known for his clarity, conviction, willingness to take contrarian positions when technicals demand it, including the notable stances on gold, silver, platinum, and relative value trades with gold versus oil. And we are going to get into a lot of that right now. Francis, if you want to embellish that or correct me on anything, have at it. And I'm going to get right into the interview because I don't want to waste any time. I feel very much valuable interaction between the both of us.
No, I thought you paid me undue credit. Let's get straight on with it, David, and thank you for having me on.
So the first one I want to talk about is silver price expectations, but I want to nuance it a bit. So I'm going to throw a couple things at you. From a technical standpoint, we're in now the largest silver cycle probably in my lifetime, and we finally got a breakout. I don't think we'll ever see 50 below 50 in my lifetime. But what happens? What do you think happens after we go into this multi-decade breakout? And then on top of that, are you seeing any confirmations across timelines, the weekly, daily, monthly, that there are divergences worth noting? So let's talk everything silver, what you see for the future, and if you want to put any technicals on top of that, please do.
Yes, it's important to say what I typically start every interview with saying to get the framing correct, because everybody talks about the silver price and very few people talk about the unit of price, which is in fact the dollar. And we are in a debt fiat debasement cycle. So number one, everything is going up and everybody is suddenly going to think this is a great period of bull markets, yet very few people are feeling rich. And that's because wages are lagging, real costs of living, and we are in the accelerating phase of debasement in terms of both debt and fiat. And they're the same thing. I very much like to describe debt as just delayed fiat with a rental payment on it. So it's fiat at some future point, and you've got to pay for either the borrowing or the get paid for the lending thereof. So we're in that debt debasement cycle. People should understand, because many people want to go into, particularly in the US, and I would imagine you have a strong US representative in your audience, they want to talk about stocks and everything else, and the NASDAQ still going higher, and all of these various things. The only unit of account that we should start off with as the primary unit of account for benchmarking your wealth for this epoch that we find ourselves in is a gold ounce for me. And when you do that, and believe me, I'm forensic on charts. If I have a USP I do it for fun, and I would even unpaid, is I look at charts all the time. And I divide every chart by gold ounces, and everything is actually in debasement downwards, even though nominal normie, as I call it, the person who sees number go up, the S&P's up, the Dow's up, the NASDAQ's up, other assets are up, property prices probably just about hanging, but they are down in certain areas. There will be, even in nominal terms, downside to be experienced, but up isn't up if it's not up in a gold ounce. So I'll just lay that foundation down. In fact, very few things during the debasement era, the hyper-stagflation debasement era that we are in, are actually going to be going up in gold ounce terms. And I will reduce them to my only, and there's no such thing as a sure thing, but high probability 5 would be silver, platinum, which you've expressed an interest in discussing as well today, miners, and although neither you nor I are bought into and are great love for the new digital on-ramp money, at some point there will be status digital tokens that will have a period of overperformance to gold. And that is the job lot. Property, you think it's going up. In financially rebased gold ounce terms, it's not. So silver is your alpha. It's the largest of those markets at a commodity level to gold. And the gold-silver ratio is your benchmark for that. And our expectation is for a single-digit gold-silver ratio. And something you've always done, and I want to pay credit to your work for many decades in the gold industry. Ever since I was following GATA, I come from the land of 2 mile down mines. I understood the significance of gold, and we had, life insurance company CEOs that said one day the dollar will go bust in the 80s. So I've been in the sound money space, but you've been somewhere there, along with the likes of GATA and Jim Sinclair. So thank you for your work, and it is God's work, in my opinion, for other people. But this has been coming for a long time, and we know we've had a form of suppression that is unraveling. So you have a 60-year event, and we're very technical. We have a unique method called HVF method, which points out big constrictions with 3 impulses. And we are, since 64, the Gulf of Tonkin, right the way up to the 81 high. So Vietnam was the over expenditure that generated the 80s high in gold and silver. At that time, America was one of the most dominant nations and also had a reasonable debt to GDP. It was in the 30% at that time. They were able to raise rates. Volcker did it to eventually tame the debt market, massive debt rebasement. You went double digits. Imagine how those bond markets collapsed. And you had a very weak dollar period during that period. Then we went financialization of everything once we pivoted fiat. This is all still part of one grand cycle, starting from 64 to the breakout at 25.9, which was for us because we had a squeeze within a squeeze. I should get the charts up, actually, if you don't mind, David, as well, because as I say, if you can permission me for that, because it's so much easier seen. But it's a 60-year structure setup that the first major leg was just that Nixon event on the unpegging of 1971, brought about by the over expenditure. People don't realize more munitions were dropped in Vietnam than all of World War II. That's how the military-industrial complex pigged out during that era. The only reason we didn't feel it is there's a massive difference between your European cousins and brothers being bombed in Europe and Americans being involved in the foot invasion, on-land invasion, and someplace far away in Asia. But it was criminal. It was Agent Orange, chemical weapons, flamethrowers, napalm, a lot of things we should all be ashamed of. Not American citizens, but it was decided by the warmongery complex. Anyway, that's your whole first leg up. And then we had the financialization of everything. Because they cleared out the debt, they debased it right the way down. Volcker reset the clock. And you had nobody needs this useless metal. And we had the long, low dip that eventually was Brown's bottom, Gordon Brown, of England, who transferred all of the gold, no doubt probably to an inner cartel member for the very cheap price of $257, literally picking the bottom. And then we started to have the property boom. And again, as I say, if you've enabled me for shares, so I'm going to share a couple of these charts just so that instead of painting images in the sky, I can actually be more coherent with your members. But it's a small run through of this entire structure. So when someone asks the general question that you have done, what's the future for silver? We are so early in this move. And something else that I say, and I think you've subscribed to a similar school, is the bulk of the money in a parabola is made, ironically, in the last 5 to 10%. So if you're doing well now, please take it from me. You haven't yet begun to reach your high water mark. You have to stay in this trade. This is a generational trade. It has taken so long in setting up. So this would be the Federal Reserve creation in 1913 and all of this, all one big upward leg into the Volcker high of 81. Then the financialization of everything into here. Now, the one difference, many people talk of cup and handles, that our particular methodology does is it plays the squeeze within the squeeze, and we got in earlier. So this was the second leg, and then you actually have a squeeze within a squeeze there. But this is all a volatility constriction, and we are HVF method. That means Hunt, my surname, volatility funnel traders. 3 impulses. 3 is a magic number technically, so I'm a technical guy. The typical entry was at around the 30s there, but because of the squeeze within a squeeze, you should have got in there. And we have been leveraged long since, and this move has really just begun. It's a 6-month chart, so every candle is half a year. That's why that's such a small candle, by the way. We've only had a few days of an entire 6-month period. So don't see it as a loss of momentum. And that's where we are with silver, David. And this projects a target of $333, this technical pattern that we have, which will be a localized high and probably some area of pause. However, it's not of top call, because first major setups of such scale are anticipated to have overperformance. So our real final moment where we will sell silver, and you should always have a point where you exit, is in fact once we have gone single digits on the gold-silver ratio, which is a different chart. And you know fundamentally, actually, and in fact, you put out a very good post, and I encourage everyone to follow David on X under Silver Guru 22 for this comment. You were showing the amount of gold to silver mined year for year over the last decade. And the last year we had data for that was 6.9, and it had come down from 9s, 8s, 7s, 6s. So while many people say, Francis, really, single digit, aren't you a bit out there? Isn't 30 enough, 35, whatever the case may be? The answer is no, no, no. We have 2 things working in silver favor. One for gold. Gold is a single turbo. It's the fiat and debt debasement. That's what's creating the gold parabola. It's the asset of final preservation of capital, not return on capital, return of capital. This is a rotation to preservation. So we'll drop the catchphrases, use them as much as you like, but the rotation to preservation. Silver has that as a monetary metal, and on top of it, it has the physical demand issues of suppression for many, many years and above ground scavenge mode, plus the fact that it was made non-economic, and silver mining has almost become a hobbyist industry with very small cap because of the returns being so low. The supply, the bulk of the supply being dug up is actually not from dedicated miners as a byproduct. So there's so much that I should probably hand back because I've gone long form on you. But the case for silver is extreme, and it's multi-generational, and it's going to outlast most people, and the best money is going to be made at the end, even if you're already thinking you've done well so far. Let me hand back.
Oh, very good. I'm going to try to be succinct. I could talk as well. Very valuable information. The first thing I want to comment on is relative to using gold as the measure. I've been mentored by several, mostly through books, but some directly. One that influenced me, in fact, influenced me to get into the financial newsletter business was Jim Dines. And the first book after I started subscribing to his newsletter was The Invisible Crash. And The Invisible Crash, he says, here's the Dow Jones Industrial Average by the numbers. And here is the Dow Jones Industrial Average versus gold. And it was in a crash. But unless you measure it in terms of gold, you wouldn't have seen that. And so I had that paradigm shift to my thinking at a very, very early age, at least, relative to my age now. So that's one comment I wanted to make. And I think that's the only true way to do it. You and I aren't the only ones. My friend Mike Maloney talks about, don't look so much at the price. How much does my silver buy in terms of barrels of oil? How much does my silver buy in terms of a home? How much does my silver buy in terms of the stock index or whatever? So I do believe that's the correct way to think of it. The other comment that I want to reinforce was that the bulk of the move comes in the last part of and I'm not an Elliott wave guy, but I believe in the general principle of it. The last phase up is when you get the greatest capital appreciation, usually in the shortest amount of time. That doesn't mean we've got 3 days to go. We probably, in my view, have a year and a half or so. I don't know, but I want to prepare people mentally because if you ever listen to me, you probably hear me every 10th interview. My favorite quote is chance favors the prepared mind. If you are able to think outside the box, measure things to term a goal, know what you're really looking at and how to outthink or think outside the box, you do have an advantage. So think about that fact. Lastly, I want to comment on the gold silver ratio, but before I do that, all markets go from undervalued to fair value to overvalued. And silver has not been overvalued except temporarily in my birthday in 1980. I mean, it only got into the 50 level for minutes, as far as I was told from the exchange. And I got some pretty good contacts at the CME. I don't think they lied to me. But anyway, whether it was 1 day or one hour or 2 days, it doesn't really matter. It was very temporary. Same thing in 2011, which we didn't quite get to 50 unless you look at the next futures month. Very temporary. It was there just a few days. But this time, we blasted through 50, and that's, for me, a new support level. And I think we're going to laugh at that number. And a lot of people think that's as high as it would ever get. And it did kind of flutter around there for a while. I think that is the start of the whole new paradigm, where not only silver is the most technologically critical metal to the planet, but it also serves very well as money if need so. So that leads to the last follow-up, and that is, I've said that in an overvalued market, the best we've seen on the gold silver ratio so far, it's arguable, was it 31, 32, or 33. By my charts, it was 33, but it was in the 30s. If we're going overvalued this time, it should get below 30. Does that mean 20? Does that mean the classic monetary ratio of 15? You're saying single digits. The best I've written, and it's on paper, I can't take it back, nor do I wish to, was I said in an extreme, I saw 10 to 1. Tell me why you think you could get even below that.
Yes. And in fact, I'm going to start with the point you raised in your dialogue there, which was very interesting. And it starts with the Dow Jones gold ounce to show how much more correction we've got in other assets and how much more money has to flow preservationally, because you made a very good point. And this is one of my favorite charts. And I'm a great believer pictures is worth 1,000 words. And I'm just backing your 1,000 words on that with a picture. This was the Fed creation era here, over here, where this blue writing is. And this is the Dow Jones divided by gold. Again, that same 6 monthly, each 2 candles is a year. And they were supposed to bring in stability, and all they've done is bring in volatility. So you straight away from, you had the sinking of the Titanic, then you had the Federal Reserve creation, then you had First World War by 1914. Then you rolled into the roaring 20s, which gave you this up move in the Dow from around 4 gold ounces, 3 to, you were, before the Fed created, you were in this range here. You can see it's roughly here. And that's about 2.5 to 4 gold ounces to buy a basket of the federal, my apologies, the Dow Jones stocks. You ran up to 18 here in the roaring 20s. You then collapsed down to 1.88 in the Great Depression. You then took ages to get to that previous high. That only happened there. And you had the 40s, 50s, 60s, the probably peak America period, in my opinion, the post-war period, until you ran into the Vietnam War, which was fiat debasement, and then you started to have gold coming through as sound money again. But at the top, you were 28.5 ounces. Bang. As a result of the Nixon events, the Vietnam War and everything, and the stagnation in the stock market for multi-decades, people forget that. The 70s was a horrific time for stocks, the late 60s, the 70s. You went sub 1, you went 0.99. And also think about this broadening structure of stability, inverted commas, that the Federal Reserve has brought you. You then turned and ripped with Volcker after he debased all the debt and handed all those bondholders huge losses by going to double digits in interest rates. I want to leave that as a mark point because we've continued to say the debt market turned in 2020. We said it at late of 2020. It took 4 years before Stanley Druckenmiller and Paul Tudor Jones said the same thing. You went to 45 ounces on the high end. In the new financialization of everything, the peak of bubble period was actually the dot-com bubble. And we've already begun re-rating down. I do also, as a little educational, want to highlight that you had because the swings are so big and they're getting broader, they're getting ever bigger, you had a little halftime here with a dip and then a rally before you went into the crash. I'll be referring to that now because you can see we traded down 2009 depression. Gold is going up relative to Dow Jones. We had a hammer there. Then we have the Mag 7, everything, all of that bringing us back up, the tech boom, right up to 22.5. So you have a high of 45 ounces. Never been that expensive, the equity markets, to a gold ounce. You peak here at 22.45. This is technically very poor. See how small CV19 is as of an event, and you are in an absolute spill to the downside. And my prediction for the Dow is that you're going to get sub 1 ounce of gold again, because that's how broadening structures play. Now, something might intervene before that process gets a full chance to play out. But I'm saying it's underpriced that can happen. I'm not saying it has to happen. Everyone thinks it's a Looney Tune fraction of a percent. I'm saying it's more like 30-40% chance of happening. It doesn't mean it's nailed on, but that would be, and I put in a 0.66. And I highlight that you have an ABC leg down in the second crash here, that halftime event. And I think you just got a bigger one this time because, of course, it's a bigger distance. So you're here, and then you're there, down. Now you are now at 11. How much of that is made by gold appreciation? I would say the bulk of it is gold appreciation because of the debt and fiat debasement. Because of that, in nominal terms, the Dow doesn't have to go down much, and gold can carry most of that 11 ounces going to 1 ounce. So you potentially could still be looking at an 11x if the Dow stayed flat. Amazingly. If the Dow actually goes up in nominal terms over the next 5 years, even though not much, you could actually have gold do more than that. So that is huge. So if you think about gold doing anything like those numbers, maybe you think the Dow will be down 50%, and it could even be worse maybe for a while. Well, that then means you still have, if you bring that down to about 6 from 11 or 5.5, you still have to have gold go 5.5 times just to get to 1 ounce. And I assess it's going to go sub 1 to some fraction of 1. So this is the indictment of the Federal Reserve chart for stability. Number one. B, this shows you're in a 2-leg down for which the subprime collapse low was just the AB leg. You had a rally on the Mag 7, and now we're dipping for this the third leg of a ABCD. You mentioned Elliott. I think that's simple enough for most people to follow, and that's where we are there. So that's a little bit on of the point you raised, and I think it's a very useful chart. And you can see each boom and each bust. Why silver below 30? Well, the interesting aspect about all of this is you've got a situation where we've actually, through the green agenda, the green mask, as I call it, the watermelon communism, you've actually made it very, very obstructive to bring new supply on anything into the line in the Western world. Now, there might be some rollback coming on that, and I imagine there should be in some ways. But even if you cancelled everything that was making permitting mines hard right now, you don't get a mine to market in a short time frame. You and I both know that. You're talking 15 years if you are starting with a business plan and a good geological report. So what actually happened is price has made a problem. Moderately decent silver reserves that are primarily silver reserves, there's no other thing to go dig a hole in the ground for. aren't being mined because the price doesn't make it economically efficient. Now we have the supply and demand pinch. Now that everybody is going, if I don't have it in a vault in my own country, I don't have it. So now you have the likes of Samsung on the devices doing deals with mines. You have, solar panel manufacturers. All of this happening. You're having entire mine output being bought outright. You're having mining explorers essentially being funded by corporates, not even banks, that are going to be far more forgiving than a bank and easier to deal with because they want the outside product. You're having a lot of supply that's no longer going to come into retail market at all. So you've got solid state batteries that can do 900 kilometers. My personal perception is, from what I'm seeing, they want us all in iPhone cars. I call them iPhone cars intentionally. It's track and trace. It's remote control by a force. David Morgan says hurty words on X. We can just drive him straight into the basement of the police station and lock him in his car and bail him out into a cell, and he must repent at his leisure. It's remote control. It's track and trace. It's cameras as much on you as it is on this. It's driving supposedly for you, but it's actually monitoring and entrapment. I see it as a nefarious activity, and they need silver for it. So the one upside that goes hand in hand with that is that, they need a lot more silver. The solid state battery at 20% of uptake would take 100% of silver production. But the difference is you charge it in 8 minutes, which is usually how long you take to fill an ICE engine when you're going on a trip, and will give you 900 kilometers range, which is what my diesel Range Rover gets me when I want to go up into Namibia from South Africa. And I love long range cars. I hate filling up at gas stations. So they're going to get people into all forms of battery and automotive driving by improving the performance. And for that, they need solid state batteries and silver. So production and industrial use is now, which used to be a negative for silver, is now turning into a second turbocharger. So where gold is the Porsche turbo, this is the Porsche twin turbo of the later generations. And, when you're starting, and we're just at the north, the greatest acceleration is at the beginning. We're really just getting going. We warned that the stall box, if you break it to the downside, let's just get a square instead. We weren't sure if you were going to get a demand destroying event. We were wrong on one thing we have to confess to. Always own your losses. We thought they might do a demand destroying event and crash the tech market. And we said the first thing you should be in is gold first. You rotate when we run the lows of the 72. And when it started going out of this box to the upside, we wondered if we were going to have a crash. And I continued to say gold, stay with the gold, because when everything crashes, if you have a demand destroying event, the higher beta of silver can be tricky for people. But as soon as you broke that 74, 72 range, everything became about silver. I was stacking both, but I was roughly around 50-50 by value. Now I only stack the silver and I reweight, and you can even trade a little bit of gold for silver. I wouldn't get rid of all of gold. It's your balancing. It's your great portfolio balancer. And of course, it's much more portable. But this was a key break at 65 here, David. This for us is a bit of an ugly head and shoulders, and that target takes you to 32.46. So you were mentioning the 30s, and I think you're not far wrong. I think you get a bounce and a reaction there. So that's a big head with a kind of bulky shoulder. It's not perfectly typically standard, but once it got going hard. You might have a return move here. You could have gold outperform for a spell. You can see we've got a bit of a wick there. There was a bit of a buyback. And that's good because it's extending the run of the gold-silver ratio, which means we have more time to buy silver. This is the target for those head and shoulders at 32. But I just want to highlight what your question was, why beyond 32? So I want to make sure I answer that. What happens when you get down to 32? There's other technical structures. There's other technical structures that have existed. You end up with an even larger, say you get down to 32 over here, you get a reaction, you get another shoulder, and you can potentially be set up. Now, there's quite a few assumptions in that. I think you could rally here first before going down, but you then set up a new pattern. Was that pattern to perform to a downside? You're at a single digit. 8.22 is what I've got there, but that's a guess. but we use a horizontal neckline. We expect to get to 32. We expect a reaction at 32, and then we expect it to go again. So people should be prepared for these events, and that's not all going to be straight line. As good as it's been, it's not all going to be straight line. Central banks might become the dominant buyer and all of retail be wrecked, or retail won't be allowed to buy silver for a while. And then it will be back in the open market, only commercial will be available, and all of us who already have silver will have to sell to a corporate that has a license to own. Who knows what's going to happen? Because one thing for sure is they don't want you and I getting wealthy. So lots of things can happen. I think we'll be given opportunities to sell. I think our opportunities to buy you can't look that gift horse too long in the mouth. If you have opportunities to buy silver or platinum, take them while you still can. Let me hand back to you because I think I've covered why we go single digit.
No, you did great. Excellent. So the next one, excuse me, the next one is about platinum. You and I think are, from what I can determine, I can't watch everybody all the time. I got work to do, but I know you're a big bull on platinum. I am as well. We wrote about it in the Morgan Report for about 6 months, setting up the fundamental case for it. Pulled the trigger in the April report. Gold had hit 3,500, and I said it would stall out. It did. And new money, or even old money, you could swap some gold for silver, or buy silver or buy platinum. Hold off on gold for the summer, which turned out to be accurate. I think platinum was buying gold at half price, and I actually wrote those words in the report. We were at about $1,000 roughly, and now we're at 2,200 or so USD. So I just want to hand it over to you. I got a few questions. I'll throw 3 or 4 at you. Answer the ones you want. Platinum has been left for dead by most investors, and the fundamentals were just loudly screaming at me. How important do you look at the platinum to gold ratio? Is this a catch-up trade or a structural bull market, or both? And finally, where does the platinum sit in terms of risk reward in your view?
Lots of great questions in there. And I think, again, we're like-minded on many things. I think it's a great catch-up trade, the short answer. We trading our specific methodology, and I'm on the platinum chart on the monthly just to orientate everybody. We called this is a classic HVF structure. So we were very dominantly platinum long. We managed to get on that wick in the 800s and sub 4-digit numbers, 900 platinum, which has now shot to 2.5 literally in a year and a half. It's been an excellent move. But I'm going to take you even further out on platinum just to highlight a couple of things and to give you the long history. Macro helps everybody understand where you are, because a lot of people say, well, that looks pretty high and you've got a bit of a selling wick on that candle and a little bit of rejection there. Is it all over? You're going to get a lot of the people, when something's moved as much as it has, that are going to start saying, well, you should be taking profits, everybody's greedy at the wrong time, etc. So if I just switch the charting back on that I've got on here, because this is a chart that we do a lot of analysis on, and it might look a little bit overwhelming at first, but I just want to highlight a couple of things. We had a beautiful structure here for breaking out, and this was during the 80s. And platinum was worth more than gold, and it spent most of its lifetime worth more than gold. And it gave a beautiful exit for a target here. Now, the decade that hurt platinum, that has thrown everybody off the scent, was a substitution decade. So platinum is the lead metal in the platinum group metals, PGM it's often known. I know you know this, but just for your listeners, David, so that everybody's on the same page. Inside that, there's palladium, there's rhodium, and there's a few other smaller. I don't need to get into the specifics. It would be almost impossible to get your hands on them to trade. What we had is the green agenda, first of all, in this orange epoch to this blue epoch. And these are the continuation phases. That's a bull market. That's a continuation setup. You get long, that's a bull market. So I should probably rescale this because it's maybe not, doesn't look so obvious that it's a bull market. I was trying to include the targets that I had. And we had a continuation error. Instead of being what I call horizontalized and squared up like a a symmetrical triangle there, which is an HVF setup. We actually had a different variety. We had a falling wedge for platinum, which is more bearish because you actually were making lower lows. Why did that happen? The overall, if I had a chart for the overall platinum group of metals, you would have more of this, less of lower lows. You would have had a squeeze. And you would have, the worst low would have been this period here in the beginning of the bear market. Because during this era, palladium was at one point $250 odd, and platinum was in the thousands. Platinum was literally 7 or 8 times in value of palladium. And when they started to look at the catalytic converters and they were pivoting away from diesel and into all the ICE things, they recognized they could substitute with still reasonable efficiency for palladium that has quite a close profile. Not identical, it's not the same metal at all, but there was substitutional possible. Margarine isn't butter, but it can do. It's not as healthy, but hey, it works. In the same way you had that. And during this epoch, that was roughly the bottom of the subprime crisis to 2024, you had palladium going very strongly up, which would have given you for the platinum group of metals something more like what you had here. Remember, you should view them as a full set. And also, you had an absolute blinding run in rhodium, which went something like that. Now, rhodium has come down. Now, palladium is roughly approximately $250 cheaper than platinum. So now it's about 80% consistently. There's no major substitutional value. That's been arbitraged away. And now palladium is also hard to find. So they had a little bit of buffer that they played that card. That card's gone. During that period, platinum industrial use went right down. It's quite rare to be used in jewelry. I don't know many people that say, oh, I must have platinum jewelry. Rolex will use platinum for an anniversary watch, etc., maybe. But generally, the demand was quite low. And in fact, at certain mines in South Africa, 75 to 80% supplier, Russia about 11, 12% on top of that. So you're talking about BRICS nations dominating this. Getting your hands on platinum is real hard. So this was a suppression era that cannot happen again in my use case. So just a couple of properties on platinum, David. It won't tarnish like silver. It's much harder. And in terms of scarcity, you need, for every 16 to 17 gold ounces, you'll get 1 ounce of platinum. And then you have your number of 6.9, let's call it 7, of silver to gold. So why do I even put platinum potentially? And I think this is, especially in the second half, although it's matched silver year-on-year performance already this year. They've both done approximately 140, 145% for 2025. But I think it overperforms in that latter half particularly. Why do I put it on the same page as silver? Think about what the platinum price would be if it was just based on scarcity, and understand how much better it is as a use case for those properties I've just described. You're 16, call it 17 times. So there was 180, 175, 190 tons of platinum compared to 3,300 tons last year of gold. That's where the 17 number comes. Go do it, go research it. How much? 175 tons, guys. It's nothing. 175 tons of platinum. You've got to remember, this stuff weighs stuff. This is 100 ounces. It weighs. So 170 tons is really very low amount. And if you multiply that 17 by, let's go with the 7, the current mining, which is on silver and gold, you're talking 70 plus 49, you had about 119x by scarcity, platinum to silver. So if I pull up the platinum chart, and I've done all this, I love charting, I love the relative valuation. So we go XAG/USD, we get a nice long-term chart up, and then we go and divide it by the platinum chart, and we want a nice long-term one up there as well. Whoops, let's type the word platinum. It prefers it when you do that. It brings the right one up. You get the relative valuations, and I've marked when one is more overvalued to the other. In fact, I want to just flip that around. Sorry, I'm messing around here a bit with the charts. Let's just get that. I'm going to do platinum to silver, and I'm going to show you why I feel that it is undervalued, specifically even to silver. And I'm probably the biggest bull that I know on silver. It's not a contest that I take too seriously. I'm being facetious there. I think you're very bullish too. Let's just switch this on, and that gives you 1969, the history of, have I done the right thing, TVC, platinum? Sorry about this, guys. Fiddling with the charts, and I want to divide that by XAGUSD. I've already annotated, and I want to get that particular chart up. It's a pity because I've got a chart which I've already pre-annotated, and now I'm going to have to reconstruct this for you.
I wanted you to show me platinum silver, because if you were going to swap, you could actually swap silver for platinum, which I'm actually thinking of doing. It'd drive my average cost a bit higher, but if I'm swapping silver for platinum, I think I'm doing the right thing.
Yeah, and this is over the history that we have, and we have a decent history. It's not super long, but from 1969, typically platinum is overvalued when you're at 110. Now, I just did a number that brought you out by 120. I think I said 119. That should be, by scarcity, true value, okay, for platinum to it. That's on mind, the way it comes out the ground. And in the long term, there is that degree of, call it a mean reversion. How unique is it, and what ability are you getting to have it? If you were 119 times the $80 that we are now on silver, I don't know what we are, we might have dipped below 80, but let's just call it. If you had 120 times 80, you should be, $8,000, $9,000, $10,000 platinum. So I see platinum as particularly cheap. And platinum is a buy when you are in this low zone. So I'm just doing what I refer to as tops and tailing here. I've got a chart up here, which is basically the platinum chart divided by, and I apologize, I already have a much better annotated chart for this, but I was battling to bring it up. It must be a different broker I have it on. But essentially, you've had this relationship pivot around. Platinum is quite recently discovered metal. Many people don't realize there was no platinum in the 1800s. Many will say it's not a monetary metal. It hasn't been around long enough to be the metal of kings. It is really unique, and it's a really recently added element. And this might be argued where it reflected. It's at about 125. This is log scaled. Let me just move that two handsome men out the way there. We were at about 160 up top here. So that was probably on the high side. And that's when you want to rotate out of platinum by relative evaluation. So maybe the 99s through to the beginning of 2008. This is where you definitely would prefer, if you've got a choice between the two, you should be a buyer of platinum and you should rotate out of silver over here. And we are right near the lows. We are sitting at 29 times. So your silver, you only need less than 30 ounces of silver to get a platinum ounce. And that should be, by scarcity and mining rates, at around the mean. Remember, you can overshoot because mining can't bring supply in a hurry. So the mean is the midpoint, really, on scarcity. You should be at about 120 by mining. So you're buying at 30. So this is why I say platinum is the only other thing that gives alpha over silver. Never mind over gold, in my view. It's cheap man's gold. Many countries you have to pay a VAT because it's got an industrial rating. Americans are sitting quite fortunate position, but the premiums are higher, the spreads are wider, and everyone goes, I just can't bring myself to buy it. You're forgetting the multiple is so much higher. Once you're in, and that much bigger multiple will go, and it'll be far more scarce, and that market can gap. And we're not talking gaps against you. I think gaps to the high side, and that's when gaps are your friend. So you are in one of the worst relative low periods, apart from a really schizophrenic moment, which all coincided with the silver high in 1980, which to me, platinum wasn't getting recognized in that era. It was too young a metal. So this is just almost doesn't qualify this low. I would say it's bad history, because you had silver go 50 back in the 80s, and people weren't even thinking of platinum. It had only been around for 30 or 40 years. So this is almost bad history. So you're quite possibly at an all-time low at those relative valuations. And there was a substitution effect that was brought about by palladium during that period that I highlighted, the post the 99 to the subprime lows. So if you take a look at palladium and you look at its long history, and again, let's clean the chart up a bit. Palladium, on a big history point of view, you can see when it was at the $200 in down here. In fact, again, let's move the good-looking men. The $182 down here. And that during that era, platinum was thousands, 2000s, it's even traded 3000 before. Platinum is the only precious metal really not to have recently made an all-time high. And that's where the substitution came. Palladium came up. You could even get palladium at 455 in 2016. 455, you know. So it then ran like an absolute monster and hit 3,400. That's a huge move. That's a huge move. And since then it's corrected and it has now done a big rounded bottom turn. So let's have a look at that rounded bottom turn. Technical analysis is your friend. It goes like that. There you go. We call it complex inverted head and shoulders. You get a W for a head like that, and you get two smaller shoulders. It's a classic reversal pattern for us all day long. Now you made a target and had a pullback, but this is a reversal pattern where you're in a downtrend continually here, downtrend, downtrend, downtrend. You're now in a revitalizing uptrend, and you can see you're at 1772. Call it 1800, and you got platinum at about 2.3. It's not a good substitution option. It's no longer the 250 or the $450 guy that can be substituted for the 1,500, 1,800, 2,000, 3,000 guy. And that's why the group as a whole now will advance, but platinum will outperform because it was suppressed. And they didn't actively pursue mining as well. It's also the supply chain stops looking for things if it's not really that sexy anymore by making a price. So that's the answer for the case for platinum. And I hope that is a pretty broad answer.
Much more than sufficient. I'm going to ask a little one that just popped in. Since you have some South African background, one of my thoughts is that, you know, I know they've had electrical problems. I know how deep you got to go to get platinum. I know that they, you know, got to cool it, all that stuff. What do you think about the infrastructure and geopolitical problems in South Africa being a boost to the platinum story?
Well, wages, there's a lot of low labor costs, so miners come cheaper there. In actual fact, the Rand hit an all-time, it hit its target and is actually now stronger than the dollar and has been for a couple of years, which is not an endorsement of the government. So both governments are terrible, in my opinion. United States in different ways, and the South African government are terrible. But ironically, I'm actually expecting the Rand to continue to outperform the dollar. And the dollar is the greatest debasing of the majors, along with the yen, because there's a complex relationship with the yen and the dollar that I'm sure you're familiar with. Outside, I expect the Korean won to be a bit yenified as well. But those three currencies of the first world nations are the worst performing currencies for me of the majors. And ironically, I'm expecting these second and third tier currencies actually to do better. And the commodity cycle that is being brought about is going to help that. Plus the fact that it's in the BRICS and they're veering more towards the trust and the bank vaulting, it will be more supportive for general trade. Then it's going to be the currency then for that. So actually, I'm expecting the Rand to beat the dollar again as an irony. But your question was around infrastructure. So South Africa is a complex question because actually it's a first world, third world. Where I live, it's in affluent. People have solar panels. By the way, Eskom are cutting electricity far less. That grid downs are largely done. They were losing clients, and they were permanently losing clients because and they were losing the best clients, the paying clients, because everybody's got more reset prepared and has gone solar. So people have rainwater harvesting. They have big, what's called JoJo tanks. They're these massive 10,000 liter. They've even gone water because there was water restrictions in the Western Cape, there was a drought, and they hadn't done enough infrastructure on dams, and they were rationing water for a while as well. All that's been prepped now by the one part of South Africa. Then you talk about the mass population that are in the townships, and they live a different life. So it's kind of like you're going through Rio de Janeiro. It's beautiful apartments, penthouses, and then there's the favelas. In some sense, the Western Cape represents that, and other parts of South Africa too. So I'm going to answer the kind of South Africa you would experience. You actually have lower cost of living, because the rand's done this badly. It's always been lower cost of living, local produce made, better food. It's actually one of my chosen reset places. Now, there'll be people that'll go, what? South Africa? You're telling me I should leave America for South Africa? No, I'm not. It's one of a few. I have many. There is no perfect bunk out nation. All of them are going to end up biometrically digital and CBDCs. The whole world is going that way. But being out of the West, particularly the hegemon and the European Commonwealth nations, is going to serve you, because you're going to face massive fiat and debt debasement in relative values of lifestyle that are overrated compared to what I am getting in a place like Cape Town, and compared to what I'm getting in Georgia, compared to what I'm getting to Panama. And all of these nations sound like second-tier nations. No, they have wealthy areas, wealthy suburbs, great quality of living, and some of the problems they don't have that the West has. So one of my underlying messages, which is a very unpopular one, is you need to leave the legislative footprint of the Western nations, because tax scavenge mode is coming because of the death of the ability to have a bottomless overdraft on the debt markets. That was subtle taxation of you, Milton Friedman. Over expenditure is taxation through fiat debasement. Because of that, they have to come directly to tax you. They're going to cut services. The other trope I like to deal with, David, that people, and again, I love Americans and I love visiting America. I come over for conferences. It's a great place. It's a beautiful country, all of this. So I don't want anyone to say I'm like beating up on America specifically. Europe's in an absolute mess. It's going to go down with America, but the hegemon falls hardest. It is not the cleanest dirty shirt. I almost go into rage mode when I hear this. It is the largest, dirtiest shirt in the laundry. It is not the cleanest shirt. When you add the unfunded liabilities into the mix, Japan goes from 250 to 350% debt to GDP. America goes from 135 to 600%. So let's understand. And Triffin's dilemma is the hegemon exports paper, that is fiat, and takes the goods. You've been doing that for decades. It's how the system was designed. Don't listen to dollar maximalists, and there's a lot out there. One of them was saying, oh, look at the silver guys losing their heads. We're crossing $25. Literally, as our squeeze within our 60-year squeeze was breaking out and going, oh, it's going for its annual pilgrimage. He was making that comment, and we were saying, this is your last chance, 25. And I went and I attacked him for that because he cost people money, and it's dollar maximalism. It's China's wrecked, China's housing market, China this, China that. They produce and they stack gold. They win. It's how it goes. Right. Understand that. So I'm sorry that you're on the losing side now. You can do something about it. I talk about, and I'm going into a little bit of an off-piece rant, and I'll finish shortly on this, but I say there is a condition I can be a better surfer than Kelly Slater. I give him an ironing board and I give him the flat Mediterranean Sea. No matter how talented you aren't getting a ride on that. And I can go locally on a small size waves and I can score 3 out of 10 and I win because he gets a naught. Do not think you can work your way through it as a talented hard worker and you have got a log cabin in the outback of Colorado and government will never find you. You are in their legal jurisdiction and you need a more broader footprint. Do work on that. It's part of your reset training. Buying silver and gold does not prepare you for all inevitabilities. It's an uncomfortable statement, but the hegemon is the tallest ladder and it falls from the highest heights. Yes, Europe will be with you. Yes, there are slave nations tied to America like Japan and South Korea that will also be part of the West in collapse. Australia is going to have a bad time. But the real communistic push And the real cultural subversion is going to be coming back through the Western nations. Biden was a warning. It wasn't the end. And it's going to be an attack vector. You're going to get taxed, taxed, taxed. You're going to get debased into poverty, even if you're super talented at business. You're the Kelly Slater of entrepreneurship. Go to an environment. Environment matters. Francis beats the best surfer in the world because he gave all the negatives and the worst environment to the best surfer in the world and just took an ABC simple wave in a reasonable conditions as a barely talented surfer. Okay, you don't have to be brilliant to survive in other parts of the world where investment will be taking place. It's an uncomfortable message, but I want to leave that message in what's been a great talk with you.
All right, I got one more if you've got the time.
Yes.
And that is gold long, oil short. When do you exit? What was the original thesis behind this? I'm sure you're still watching that. What technical evidence would tell you that trade's played out?
Yeah, great question. And thanks for the recognition. You're one of the few people that's acknowledged that 2 years ago we made this point. And it's caught so many people. And you know what's amazing? On all my broker platforms, I'm getting, Exxon is looking so good right now. These articles that are trying to get us to pivot into the commodities. Many people are mischaracterizing this as broadly a commodities bull. Remember, it's a debasement environment. Everything goes up, even things going down go up. Okay? It is going to be eventually a broad commodity bull, but first, because it's a monetary-based crisis based off debt and fiat, the monetary metals are the first and the hardest runners. They're out of the blocks like a Porsche turbo, and they're twin turbos. Some of them. The other things are going to come jogging out the blocks because they have to, because people won't be able to make bank on that. So you asked a very good question. Where do you suck these things out of that you come up with? How did it happen? And I did it. This is not the first time I've done it. It's the second time I've done it. So we were known for calling. I was on Jeff Berwick's Dollar Vigilante on stage in February of 2020, and I was in another event the late end of December 19, also on a stage that was in KwaZulu-Natal, and we said you're going to have an outlier probability of a single-digit oil, and I thought it was going to potentially crash to zero, but I didn't want to say that on a stage and sound stupid. By the way, you hadn't had single-digit oil for 35 years. And you'd recently had 150 during the property boom, 2007, and much bigger numbers. And we saw this gold versus, we are always doing charting of relative valuations. And we saw this massive head and shoulder on gold versus oil. So what is this? This is gold being divided by oil. And we saw a huge reversal in relative valuation. And I'll use another color. We saw this upside HVF structure, which is a squeezing triangle at our neckline. And we saw this coming. And in fact, we were short pipeline equities. We were short a Carnival, which is a cruise liner for old people. And we didn't understand why, because oil was about to get cheap, according to our thesis. And we were also short oil itself and long gold. And that gives you delta neutral across commodity. In other words, if the dollar debases and both go up, you don't lose for the oil going up because the gold is going up as well. So a long short is a very interesting trade. And of course, gold did famously, it ran up to its 2021 high. And then this happened on this gold oil chart. Let me pull the future. Bang, there's that spike where it went to zero. The whole chart loses all referencing as we went zero on that. That is an infinite, virtually an infinite trade. You went negative on the futures market. And the most amazing thing is I felt—
We're not seeing your chart if you think we are.
I apologize, I'm not sharing. I do apologize. Let me just recap that one quickly again. That's so annoying. I must remember to share. So this is basically the precursor to COVID. We had this inverted head and shoulder that we were calling. There it was there. And then this is the shoulder. And then we started to get what we call a hunt volatility funnel restriction. So we are macro technical analysts. And we don't even have to be good, because I just realized nobody is. We win because nobody else is. So I don't have to say we're the best. I think we're the only ones, because people outside of yourself, David, of course, but people don't look at big time frame charts, and especially cross valuation big time frame charts. And we said there's a major loss coming for oil. So that's what I was describing earlier. And what, of course, happened? The 2019 thing happened. And look at the scaling, just gone crazy, and that super wick. That's not a bad print. That's oil going to...
I know, yeah. Yeah, it was insane.
So the amazing thing about all of that is we start coming into this year and I'm going, damn, rinse, repeat. Now, our branding is 3 circles in a circle, and we, in that bit that overlaps all 3 circles. That's how you win. You understand reset, you understand CBDCs and crypto, because that's going to play a role, and you understand HVF method and the market sniper and macro charting. That's going to play a role, and we live where all 3 of those circles live. And I've always felt oil is a controlled entity product that they have as a skimming tax. Its own Standard Oil was the original monopoly, and of course the Rothschild had Shell and BP, so they've controlled that. And when they've done when we are having a boom, like in 2007, and everyone's getting a lot of money and there's a lot of borrowing, the oil price goes up and it's a great skimming tax. I call it the Rockefeller tax. When we have a crash, they let it run right down so that they can prevent it being an additional burden. And they need inflation in America not to look big, because the dollar is being destroyed, and fiat and debt is debasing, and interest rates are being stubbornly high. How do you avoid telling an absolute lie? They're already lying, but not an absolute lie on the BLS stats. You need the oil price to be low. So I have my reset thinking there. Then I look at my technicals and I suddenly realize, damn, I'm calling the same trade again, because we have a shoulder. We have the same level. It's even at a similar level. 28 barrels, 0.75 is our neckline. 1 gold ounce buys you 28.75 barrels. And you traded right down to a low of 14 here. Gold was in its, after its 2021 bull run, it was pulling back, and oil shot to 129 during that period. And I said, damn, we're going to be calling this trade again. I can't believe it. I double checked, because it's almost like we're getting a replay. Very rarely do you get the same exact thing coming twice. And it made me concerned for our view. But we said, no, this looks like it's going to go. What is the target for it? And we said, the target, it's a reversal. The problem with reversals is your head and shoulder generates a target, but it's a cyclical reversal. As you saw in COVID, once it made its target, it still continued, and then it actually blew right off. So it's a major reversal. So yes, you'll have a localized high at the 56 barrels, and that happened, and you can see the pullback, but it's a reversal. You continue to trade up. We are now sitting at 80 barrels. We told everybody at 28 barrels. And in fact, we warned at 14 and these other levels before that we were going to break, and 28 barrels was a key thing. If you had done that trade, 28 to 80 is a much bigger multiple to what gold on its own has done.
Yeah.
You've gone from 28 to 80 there. That's, I don't even know how many times 3 does go into 8. It's a fraction, I think. But you're going to get almost 3x, almost 3x. You're at about 2.75, I'd guess. So that is a huge, huge move since mid-24. That's not that long ago. You've held that trade for 18 months. And you've gone 3x on that, because gold's gone, the oil's gone from 87 down to 57 at the same time that gold that was trapped below the 2000 that you were picking up at 1800s, 1900s has now gone all the way up to its 4,500 levels. So this continues, because your question was, when does it end? It's a major reversal. And the greater the depression, the lower. So now the reset circle talking, this is the technical mind, this is market sniper. The reset circle, which is the third barrel to our gun, and as I say, we live in where all 3 overlap, is saying we haven't yet had the fullness of this depression. I don't think this is a recession. It's going to be a depression. You can't see what's happening on silver and not see bank failures. You can't see what's happening on credit and not see bank failures. You can't see what's happening on interest rates and not seeing bond devaluations and collateral of bonds point to below water. Bank of America bought 500 billion in COVID of US debt. What's that done recently? We called the TLT short in 2020. Before, 3 years before Druckenmiller and Tudor Jones came out and started talking their book. They may have been putting the trade a year before they started talking it, but we were ahead of them on this. And the exact same cycle is going to have to come because we are in a depression. We need to have a depression. It's going to be very destabilizing, but it's going to be masked by the nominal number go up because of hyper-stagflation. The currency's buying power is going so fast down that people don't realize that they are in a stagnation environment anymore because markets are going up. They'll say, can't be a recession. Stock market's at all-time high. Can't be a recession. Beef is at an all-time high. You guys are eating so good. No, people are going to be struggling. So you're going to have a hyper stagnation and you're going to have deflation because of the currency debasement. That's our economic model of hyper stagflation. This continues because they need to keep masking the inflation. And I would tie this to the securing of Venezuela. The thick, heavy oil that comes out of Venezuela, all of Texas is geared for thick, heavy oil. The fracking oil is light, sweet crude. They need to keep those refiners working. They are going to be refining and pushing it through. They're going to keep a very high supply of that. They're going to take the money they get, but also it broke China's discounted oil gain that they were getting because they were infrastructure investing and lending to Venezuela, and it keeps the price low that stops Russia from making disorderly profits. The Saudis have already mentioned they're sitting the fence. They really want to go BRICS, but they're wanting to walk away from America slowly due to positioning for the future. So I see them as an Israeli proxy, even though many people think they're completely divergent. They're frenemies. So that's the global war. So oil is going to be one of the worst investments to be in for the rebasement. In gold ounces, it's going to continue to go down because it's meant to be that way. That's how I see it. So be careful on those, because I've had a lot of people saying you should sell your gold and silver now and buy not Enron, Exxon, bit of a difference, and oil stocks and other things. No. All commodities are not equal. This is a monetary commodity key event. And the monetary commodities. You've married Giselle Bundchen by being in silver and platinum. Stop looking at the other girls. There is no better. You're here. Your job is to stay in the seat and ride this thing out. The law of parabola says the biggest gains come near the end. You're going to sell too soon. That's the advice Francis gives to everybody watching us. Let me hand back.
Very good. So I agree. A lot of stuff we agree on. And one is how this is moving. I said, commodities, and I follow them all. I used to trade futures for a living. I don't want to make this too much about me. But I said the monetary metals, you want to be really in one place. You want to be in the monetary metals. And then one of Jim Dine's theories was similar to the Dow theory. We know we're really in the bull when all four start to fly. And we're there. And we've been there for a while. Now, I have, and maybe mistakenly so, and this is somewhat self-serving, but we're colleagues, or I consider us colleagues. I'm telling people, well, where do I go? Where do I go? Where do I go? And they want to know, and I want to be right. And not only right, I don't want to harm them in any way. And I said, well, I think it's safe to go into oil based on fundamentals. But you're making an argument. We're not there yet. Stick with your premise, David. Metals are flying. Stay there. Fly that plane. When this thing starts to come in for a landing, then maybe we'll start looking at oil. So can you revivify that a little bit for me as far as where you see that? Is it a year from now? Is it 2 years from now? Am I stupid to put people in a stock that's giving them a 7% return and it's pretty low? Can you just further that thinking, please?
No, and you're certainly not stupid. And yields are impressive. The problem is things can get worse before they get better. And the nature of the crisis, the problem is many people feel immediately they had to broaden out. And they broaden out too soon. Eventually, the fiat debasement is the primary story, and everything's gone up in nominal ounces. Remember the gold ounce theory. We're looking at it on oil. This is continuing to move. It's not at the beginning, the gold ounce chart I was showing you to oil, like it was when it was 28 barrels, and now it's 80. I'm not going to say that. But the trend is your friend on that one. The key thing is when they have a depression, which I think we can't avoid going in, I would
Agreed.
consider 2008 was a depression, but never acknowledged as one, and they call it the Great Recession. So the definition of it, a depression, many people don't know that. They don't even want you knowing it, by the way. It's quite hard to find, but it's typically 2 years of negative growth with associated bank failures and other related. And we actually had bank failures. They just got made whole again by AIG, by the Fed, by quantitative easing. And I remember in the UK, they essentially had 2 years, but they got 1 quarter where they recorded a 0.1. And it was completely fraud, damn lies, and statistics. So they can fudge 2 years worth of negative quarters. So everyone knows recession is typically 2 quarters. That's half a year of negative growth. Now, the problem you have is when they control the inflation in terms of what's real negative growth and what is in, so you have nominal and real. When they control the inflation, they can get a growth number like 0.1, a really weak one, by lying on the inflation number. And our view is they were lying about the labor stats during the Biden era. We made that very clear. You were in a recession when you met the criteria for a recession. That was around about 21, 22. And you've been bouncing in and out of one all the way for a while now, but they hired jobs, DEI hires, companies that only had government as a thing. They just frauded numbers. And Yellen then said, no, 2 negative quarters isn't a recession anymore, because we had a red hot labor number. You might remember that. Now, we called all that at the time and we were belligerent. We kept mentioning it. You are in a recession. It did happen. And everyone just stopped talking a recession. Once the Fed said, no, you can't call it a recession. It's almost like all the mainstream journalists, if you mention recession, we're not taking your question. You know, they can do that. So I kept saying, you're in a recession, you're in a recession, the labor number's a lie. Now, the other number has to be looked at on the other side. You must play the game that's coming, not the game you're in, and that's the inflation. The dollar debasement last year, it was 42% down against the ruble, 18% down against the Hungarian forint. You're talking about the rand outperforming the dollar. You're getting inflation, trust me. And that's comparing one leper to another leper. You know, so it's not even a harsh benchmark. You're down 10% against the euro. So the dollar index is on a basing grind line trend. When you look at that, it's another of my favorite charts to show, and it's squeezing between the 100 and this upward trend. At some point, I feel that gives up to the downside. So Americans are going to find their currency is buying them less and less and less. Not until, so your question is, when is oil going to become a good thing? And as I say, in my opinion, it's the weakest. Even others in the energy complex will do better quicker. And you might do better with natural gas, certainly with uranium and nuclear power, which is coming back on trend. So if you want an energy representative, don't start with oil, would be my counsel. As ever, I can be wrong, and you're never an idiot in my books.
Well, we got two 5-baggers on our uranium picks because, you know, I'm sorry to interject here, but the Morgan Report does resources. Yes,
exactly.
Silver's my favorite. Yes, I'm well studied in silver. Yes, I'm the silver guru, blah, 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 blah. But, you know, from day one, we were looking at the rare earth elements before people could spell that word.
Yeah.
You know, I was into cobalt before anyone knew it was an element. I mean, I'm not trying to brag. I'm just pointing out for the audience that the Morgan Report looks at the resource sector in total.
Yes. And I think you've made many very, very strong calls in all those spaces. And you could be forgiven even if I consider oil wrong, which I don't. I just think it's early. But early is kind of wrong in some ways, but it's also in the long end, it will come. But the thing that gets killed in recessions and depressions is activity. Production, economic activity. Men stop traveling for business meetings. I mean, men, women, you know, everybody. They Zoom call, less holidays, long distance holidays, long haul, packaging, less purchasing on Amazon, less packaging, less delivery, less DHL, less all of these guys. So we are going to roll into a worse economic environment. So if you're like me and you think things get worse, and no, I'm not a doomer, I'm an optimist. It gets better for silver and gold, but it gets worse in terms of economic activity, particularly for the West. I'm talking about, you should not be in a hurry to get into the practical lubricant of everyday energy, which is oil, driving, and all the others. You should keep stacking your silver. You should doubling down on the monetary metals, because the debasement trade is a long way from being out. We haven't had major banks go bust yet. We haven't had them close people's ability to even buy silver and gold. You haven't gone unobtainium yet on a lot of things. These shoes have to drop. The debasement, fiat, precious monetary metals trade is your primary trade. The big events haven't occurred really yet. We've started to have a bit of two-tier pricing between the East and West, but it's staying within an arbitrage of about 6 or 7%. You know, you'd have to take delivery there and ship it all the way there. There's costs to that. There's insurance and all of that. So it hasn't completely diverged. Wait till they diverge and the cash price loses all credibility and the COMEX has lockdowns and, you know, much more of those mini events. We, you know, they had the circuit breaker event that was caused by a heating issue. You know, much more of these lies coming more regularly for longer. This has all got to still play out. And that is all recession, depression, deepening. And in a deepening recession, you don't want to be in activity based because everybody hunkers down. The money stops going in. Now, if the debasement is enough, you might nominally go up, but in gold ounces, you're losing. So remember how I opened this interview, gold ounces. It's not, oil is not done on gold ounces. I wait for a reversal technical pattern on that oil versus gold before I pinch. And I expect you're more likely to have a blow off first. Remember the law of the parabola. The best part of the move comes near the end. You've already had it in CV19. Major collapse. A huge glut, Venezuela now coming online thing 2 years down the line. Everybody's struggling to do anything. They just pump the oil. You know, you could be back at single digit oils again. I'm not calling that, but I'm saying you could. You could be back sub 10 for all you know, for a period, for a spike down. Why? Nobody's doing anything. They could do martial law. Do you think people are going to travel? We've got social effects to consider in a burgeoning depression where they are antagonizing left versus right, BLM, all of these kind of agendas. You could have a martial law situation. That doesn't mean very good much for petrol consumption, gas consumption, as you call it in the States. So there's a lot more blow-off events to still potentially come down the track. And I encourage people, stay with the monetary metals. Silver and platinum is your winner. You've married Giselle Bundchen, stay with her. Don't look at the other girls.
Wow, what a great interview. And thank you for that, because as I said, it's a bit self-serving. I'm doing in the energy sector. I wrote an energy letter for 1 year. I did okay. I won't say it's my top work, which is basically the metals and other resources. But what I'm really doing is the fundamental case. You know, I'm like I did for platinum. I talked platinum and, you know, for 6 months before I said, now it's the time to buy it, kind of. And I'm kind of doing the same thing with oil, but I really wanted this among everything else I asked you. So it's very valuable of your time, our most precious resource. It's priceless. Your time is priceless. My time is priceless. I honor your work. You're a straight thinker, straight shooter, and you don't quibble. I love it. And I want to do it again, but I'm more quality versus quantity. Probably looking 6 months out. But if something really happens in platinum, I'll definitely give you a DM and we will connect again. Is there anything you'd like to say at the end other than how to contact you?
Yeah, sure. Just before I give people contacts, a little throwaway snippet on the platinum. Zelensky flew into South Africa and was met by Ramaphosa and bought a controlling stake. I think it was Northern Platts. Now, I don't know where you are in resets. I don't want to take anybody down rabbit holes I don't want or point any fingers. But there's certainly a cartel of insider information. Our best technical silver miner that we chose technically was Heckler. And next thing I find out, Mademoiselle Feinberg had huge calls on it and bought a lot of equity. She was on the subcommittee that determined silver was going to be flagged as a critical metal before it happened, and she was buying these equities. So there is a cacocracy out there, and the insiders do know. And often our charting is just picking up on the footprints of insiders. I call the HVF method the forensic detective, actually, because I'm at a crime scene when I'm catching the insiders. So Zelensky going and buying a controlling stake in one of the major outputs corporations, mines in South Africa, for the billionaires that back him, and in all that is the capocracy of Ukraine and the money laundering that is going between politicians, the half that makes it to him and the half that's stolen, all that end of times stripping all the resources from the citizens. It's a huge buy signal for platinum miners and platinum quality. So again, I'll leave you with that. Regards to socials, I've really enjoyed it. Thank you for having me on. Our primary communication is the YouTube channel, The Market Sniper. Eventually, there's status tokens, which are not our friends, will run. There will be one or two outlier performances, even in gold ounces there. It's not yet. You're right where you should be on silver and platinum. So we have The Crypto Sniper YouTube if you're interested in those. And we're on X under The Market Sniper and The Crypto Sniper as well. And I think everyone should give Dave a follow on Silver Guru 22 and on his YouTube. And I thank him for his work over the many, many years that he's been in the space. And I'm glad he's around, unlike Jim Sinclair, for example, of Gata, who's not getting to see the great rebalancement of truth. Silver's move is a spiritual move. It's back to principles. It's back to real money. It's back to a lie that has been lied for so many decades that is suddenly violently being corrected to a truth. And it warms my heart, but it comes with a dark moon for everybody who is not positioned. And this will be a polarizing event. Our sole goal is helping people to build wealth, secure that wealth, and I'm talking multi-jurisdictional, and have a lifestyle with the most possible freedoms in a totalitarian environment globally. So we are non-advisory, but that and this is our time that we've set out. All these years was apprenticeship for me for this moment. And we've got guys on all-time highs on accounts that have 10x accounts with real money management, not doing stupid risks. So check us out if you want to on the Market Sniper YouTube channel. Thanks for having me on, David. I've really enjoyed it.
No, truly a pleasure on my end as well, Francis. Thank you.